Well, thank you everybody for joining us in this live stream. This is going to be a little bit different today. We're going to be sharing this live on the podcast for free for once. So that will be a nice benefit for longtime podcast listeners. We are looking at my latest stock pitch, which is Adobe. The concept and the thesis behind buying Adobe at these prices is not super complex. It doesn't fit in those boxes that you tend to want to check. If I look at my investing process, I like to be able to have a checklist and check, okay, I did this, I did that, I did that, I did that. A lot of businesses you can do that with, but some businesses are just different, I guess is the best way I can say it. Sometimes as an investor, one of those things that I've noticed about myself is I can get seduced into thinking that, oh, I've done so much work on an idea. That means this is a really good idea. And so when you look at a stock or a company like Adobe, that same workload might not be there. And so it might feel incomplete or feel like, oh, maybe I don't have all the pieces. Maybe this isn't that great of an idea. And I think that's a trap, but we need to be aware of as we grow as investors. Do you have thoughts on that whole concept, Dave?
Oh, I love the concept, and we've talked about this before on the show. We've talked about it, you and I. But like, for some reason, investors always feel like that if it's not complex, then they're not doing the right thing. And we always get into this crap mindset, whatever, that we have to make things harder than they really need to be. And we have to remember we don't get style points at the end for how hard our ideas were. And one of the things that I think appeals about Warren Buffett is that his ideas are air quote simple. They're not easy, but they're simple and they're not complex ideas. And you look at the things that he buys, something like an underwear company or an ice cream company or a credit card company or a train company. Those aren't hard ideas, but a lot of people try to make them harder than they need to be. And sometimes simple is best. And that's what I loved about when you talked about this idea of Adobe and why you were buying it. It isn't complex. And that I think is what makes it easy to understand and also provides what's a great opportunity.
We were talking off the air, maybe yesterday or 2 days ago, or maybe it was last week. I don't know. We talk a lot about different
Yeah.
stocks. It's like I have a position. So just to give a backstory, I had Northrop Grumman. It was a great defensive play, um, outperformed quite well. And I kind of always looked at it as, okay, this is my dry powder. I probably won't hold a stock like this for 20, 30 years because the growth rate isn't all that great. But as soon as the market takes a dip, I'm going to sell this and put it into one of the best businesses I can find. And obviously we've had the tariffs and a lot of the market has come back. Adobe being one of those stocks that did not come back. And I was telling you, Dave, I was like, I always had it in my mind that I was going to buy some fantastic business like a Apple or Microsoft, but like Adobe, I would have never pictured it being Adobe. And I think that's one of the traps of trying to predict what our future behavior will be is like we have this vision in our mind of how we're going to buy that next dip. Oh, the next time Apple dips like it did in 2014, I'm going to make a bunch of money like Warren Buffett did. You don't always know what that stock necessarily is going to be. And so it was hard. I mean, I had a lot of conviction on this idea, but I struggled with it because it's always so much harder to get rid of that dry powder, especially a time like now where everything seems so uncertain. We really don't know where the economy is going to go next, interest rates, all of that. So you like to have that dry powder as a place of security. But you also just, I don't know, when the opportunity is there, if it's not what you pictured in your head as being, it can be hard to pull that trigger.
Very hard, very, very hard. And the interesting thing about Adobe as your pick is I think if you polled 100 investors and asked them, like, what are the top 15, 20 companies in the world that you would always, love to buy if it was ever an opportunity, Adobe's got to be high on that list. I know it's
Yeah.
been high on my list for a long time. I think if most people are honest with themselves, it's definitely in that top tier of companies that most people are looking for to buy. To your point, when you have an opportunity to pull the trigger on a great company, it can be hard to sell others, especially if they've done well for you, uh, as an opportunity to buy more of something that could be even better. So the other thing we talk about too is like offsetting the opportunity cost. Is the opportunity cost better in this or is it better in this? And if you set aside the ego part of it and the I don't want to give up this thing for another thing, there's always the grass is always greener, right? So it's easy to look at what you own and know it versus something that's more of an unknown and you don't own it. And that can be a scary proposition. And I love the fact that you push past that pretty easily. So I guess maybe can we talk a little bit about why Adobe now and why you think it's a simple idea?
Yeah, great question. So, a few things just kind of jump out the page at you. Over the last 10 years, average revenue growth per year, 18%. Return on invested capital, 40 plus percent. I think it's close to 45. Is return on invested capital going in the wrong direction? No, it's sustaining, even though obviously AI is a big part of all this, and we'll touch on that. But is the company, reaching for acquisitions and seeing their ROIC drop? Is our margins declining? All of this, it's not really. They're just kind of continuing to do their thing. Revenue is slowing down a little bit, but I mean, it's hard not to slow down when you are at 18, 20%. So they're still growing at double digits. All the numbers look fantastic. Net debt free, balance sheets just crazy, crazy strong. They buy back a ton of stock. I can't remember what the shares outstanding was, but I think they bought 5 or 6% several years in a row. So they're returning capital to shareholders and they're doing it at pretty nice prices. To your point about Adobe being one of those, it was a darling until it's not. It's always traded around a 50 PE. So it's like if you were buying Adobe, you were a growth stock, growthy. I'm going to hold this 10, 20 years. Where'd all those guys go? Like obviously a lot of them have sold because now the stock's at like a 25, which is I haven't checked what the average S&P price to earnings ratio is, but that might be right at the S&P or maybe even a little bit below it. So it's definitely cheap compared to itself, compared to the history, compared to the market. And yet it continues to grow, but there's this huge fear around AI. And that's obviously driving a lot of things. And so for me, I look back and I almost see it. What's that thing you always say? History doesn't repeat, but it often rhymes. It just reminds me of stuff I've seen before that we've been able to buy and overcome. So, like in 2020, I was a crazy person for buying home builders. That was a great time to do it, even though the news and everybody said home builders are toast. Do you remember insurance after the pandemic? Especially life
Yes.
insurers, but even auto insurers, like
Oh yeah.
they were saying back then, oh, now that we're all locked down, people don't need their cars as much. They're not going to be driving as much. They're not going to get in as many accidents because they're not on the road as much. You had a great company like Progressive just sitting out there at a crazy low PE while the Fang was doing its thing. That would have been a great time to buy, and it was a great time to buy. What about Visa when Web3 and crypto was all the rage, and it was like, oh, the credit card payments are all going to be, it's all going to be taken over by Ethereum and Bitcoin and all of this. That was a great time to buy Visa, and we did. So it's AI, it's Adobe, and it's a story that rhymes. I mean, you can't guarantee this stuff with 100% accuracy, but what I'm saying is this is not some sort of unprecedented thing in the market. AI is hot. There is a lot of money. NVIDIA is making billions. That's very obvious. However, we've seen similar type of stories before, and so when you compare that simple idea of buying when everybody's going to look at you crazy for buying something that's predetermined that it's going to be disrupted by AI. You combine that kind of contrarianism with the simplicity of what's the actual moat, and I think you get a pretty nice, powerful cocktail of that. And I think that can be a great opportunity, and that's why it's not like crazy complicated, but it provides the opportunity here. I mean, do you remember through history like seeing things like kind of come and go?
Oh yeah, for sure. Yeah, there's there's unquestionably throughout history when the internet became a thing that there was all these other ancillary businesses that were going to be toast, and a lot of companies, including Microsoft, figured out a way to take advantage of that. And it wasn't until Satya Nadella took over that he really embraced the opportunity with the cloud and the subscription business that 365 offered for the Office suite, that they were able to capitalize on that. Adobe did the same thing. They were very much a hardware business where you had to buy the program, install it on your computer, and then if you wanted to update it or wanted another one, you had to buy another one. And they changed their model to a subscription business. I don't remember the exact year of 2014, 15, somewhere in that range. I could be wrong about that.
2013 was like the official one, but yeah,
Okay, all right, sorry. So I
took a
was in the
couple years for
ballpark.
them to recover the
Yeah,
revenue. Yeah.
right. But they were able to turn that around, and if you look at their historical numbers, if you look at the margins from 2013 and you compare them to today, it's like a night and day. It's a complete turnaround of the business as far as like the profitability and what they're able to do. So even within the company we're talking about today, Adobe, you can see how history has changed and how the company was willing to take a chance and step out on a limb. But all the other ones you were talking about, yeah, home builders, Visa, anything related to insurance, whether it was life insurance or property and casualty, everything was going to change. The payments industry, everything was going to change. And some of those things did change, but not all of them did. And so there were certainly companies like Visa, MasterCard that benefited from all that because they were able to capitalize on what they were doing. PayPal, not so much. And so, it not every investment's going to be awesome, but I think Adobe has shown that they know how to pivot and adapt, and they have a good pulse on what works for their business, and that's one of the things that I really like about them.
Yeah, for sure. Any other thoughts on the whole like simplicity, learning from history, that kind of thing? Anything stand out?
Yeah, I think the thing is, a lot of people nowadays get so focused on the here and now, and they don't think about what transpired in the past. And although it doesn't necessarily predict that it will happen in the future, it will give you some sense of what could happen. Because if it's happened in the past, there's a real good chance that it could continue, especially depending on the business and who's running it. Those things, if they aren't changing, then there's a good chance that those things aren't going to change. Sometimes I think people get a little too, how should I put this, exuberant about the possibility for disruption, that if there's even a sniff of it, everybody pounces on it.
Hmm.
And I think sometimes that can get a little too overdone. And I know you read a lot of history and I read a lot of history. And if you go back and read, even something simple like Buffett's shareholder letters from the 70s and compare them to what they're talking about today, it's not that vastly different. And so I think people should be very careful about the whole idea of something that's happened in the past may or may not happen in the future, but this time is not different. It may be altered differently, but it's not necessarily different. And so I think sometimes we need to, I guess, tamp down our exuberance on potential disruption and try to look really at what is actually going on. And I think that's one of the things I like about what you did with Adobe is there, as you said, there's a lot of fear about the whole AI thing and how that's impacting Adobe. And there's no question if you read 10 articles about Adobe, 7 of them are going to talk about the negative impacts of AI. And so it'd be real easy to get caught up in that narrative and that fear. And I guess if you know something about history, know something about the history of Adobe, look at their past, look at other companies' past, like we were talking about earlier, you can see that some of those things are going to change, but not everything is going to change all at once and like that. And just because something comes along that may disrupt a part of the business, it doesn't mean it's going to disrupt the entire business. And it also doesn't mean that the company can't adapt to what's going on as well. So I guess those are some of my thoughts.
Yeah, and I like the fact that you bring up the history of Adobe. The guy who's running it, what like you said, was around when they switched to the SaaS model. And he's been around for, I think it was 2007. I can't, don't quote me on the exact date. It's in the write up, but yeah, he's been there a very long time. He's had a lot of success. He's navigated them through several challenging things. Definitely checks the box as far as management competence. And you look at some of the examples of history where players did get disrupted. GE is a famous one for just the gross excess, just no regard for keeping things frugal or trying to stay ahead. A lot of the horror stories, I don't want to say they're completely self-inflicted, but there was management asleep at the wheel, or they were resting on their laurels, or they were prioritizing profits over people or products. So those things also play a hand in the disruption. Sometimes the disruptor is that much better, but sometimes the incumbents kind of hand it over. And sure, if the numbers change for Adobe, they start seeing margins go the wrong direction, revenue growth becomes non-existent or whatever it is, like, yeah, we're going to have to make that hard decision. But to put the cart before the horse and say, well, here's this fancy new thing that everybody's tweeting about. Look at how cool this product is, Adobe's Toast. It's just it's a little over dramatic. Like
Yeah.
I like watching things play out in the financials before trying to make up my mind that this company is disrupted or that company is disrupted. Not to say we can't make those choices independently. I look at a company like Nike, and as somebody who's observed them for a long time, I'm staying away. I continue to stay away, and I made that decision even before the numbers went south. But when it comes to something like this, um, I don't know. Maybe there's not a great answer, but just having that discretion between, is something overblown or is it not? This feels in the camp of overblown.
Yeah, for sure. I mean, what does Buffett always say? You know, you can always tell who's swimming naked when the tide goes out. And sometimes we have to remember that sometimes everything will go down when the tide goes out. And
Mhm.
sometimes it'll drag things down that are still operating well, are great businesses, and those can be opportunities to pounce. So we got this great question in the chat. So they're asking, what are your feelings on when things seem too simple?
Yeah, that's good. It makes it really, like I said, it makes it hard. I talk about like my normal process. My normal process when I analyze a stock is run it through a screener. Valuation looks like it's enough where we can move forward. And then I start to build an industry map. And it's funny that the examples we brought up, like home builders and insurance, those industry maps are they fit like square pegs and square holes. They fit really nicely. It's like, okay, we can see exactly how many competitors there are, exactly what their market share is, exactly how that's changed over the last 5 years. And we can just go da 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 da. Here's the number one, number two, number three, blah, blah, blah. It's all simple and orderly. Something like Adobe is not that way at all because of the function of their business. They have each of these different pieces of software that have multiple competitors, a lot of them smaller competitors, a lot of them disruptors trying to go after each little software. But there's nobody, and the best correlation to this is really Microsoft. There's nobody who has that same type of suite of products, software products for design professionals, game developers, marketing professionals. That's just nobody has it. So I can't put Adobe next to company with their four design products here and this company with six design products and then do margins and a revenue and a market share. You just can't do it because there is no one else. There is no parallel. They are, like I titled the write up, they are a category of one. And so when you can't rely on your previous mental models or previous way of doing things, it makes it really difficult. And I don't know, I probably overthink this thing. Luckily, I mean, Dave was there to kind of rein it in, but it was just a back and forth tug between, okay, let's load up into this thing. I don't know. Something doesn't feel right. Yeah, and I think in that case, my emotions were lying to me because it was out of my comfort zone in the sense that I didn't follow the same process that I will do with a lot of different stocks. But that's because you can't, because they're a category of one, because there's no product that is exactly like theirs. And so there's not an easy way. Like when I look at Progressive Insurance, it's very easy to say, okay, these guys have taken the most market share in the last 3, 4, 5 years. They're obviously the leader. If the valuation's good, let's hitch our cart to the leader. In this case, yeah, we have revenues, we have profits, but it's hard to build that industry map, and to me that messes with my emotions a little bit.
And, and rightfully so. The hardest part of what we're doing is trying to conquer our emotions and how we think about things, because the numbers will tell us one thing, but then our heart slash brain will tell us other things. And it can be really easy to get to drink the Kool-Aid and get super excited about something. Likewise, it can also be very easy to get super negative on something. And so when you vacillate between the two, it's really hard to stay grounded. And what is the right thing and what is the trigger? And you talked to me about a trigger that you kind of had that kind of helped you kind of get over some of the struggles you were having on the negative part of what could be the downside of the company. Do you want to share that?
So the big light bulb moment, and it's like it's too simple, but people are creatures of habit, and it's easier to, frankly, I mean, it's easier to just keep things as they are rather than try to do something new and different. We recently had Braden on the podcast. He is software expert, and he said why people love software is because it's very hard to get people to switch off of software because they get comfortable with it. Something needs to be that much better, faster, or cheaper. Yeah. And if it's only one of those things, it's usually not enough to get people to switch. We're podcasters, so I follow podcast news. So, one of the news outlets had this link and it showed here we have 19 jobs. I was like, oh, that's cool. I was clicking through the different job, and in the title, you have to have Adobe Illustrator experience or you have to have Adobe After Effects experience. And it's like, huh, that makes a lot of sense. Is it easier to train your entire marketing staff when you want to switch over to a new product so that you can save, I don't know, what, $10, $15 a seat across the company? Or is it easier to just hire somebody who already uses the same Adobe products we all use? If it was just Photoshop or something, yes, I understand there are some really compelling AIs out there right now that might take the place of Photoshop one day. But Adobe is not Photoshop. Adobe is After Effects, it's Illustrator, it's Premiere Pro, it's, the list goes on and on and on about all these different things that people rely on to do their jobs. And so I think to be able to not only disrupt one of those, which is very difficult on its own, but to disrupt the whole suite, to say we're going to cancel our, because that's the way they've structured their business model. You get access to all apps, and it's a great subscription, and you pay by the seat if you have employees, right? And so, is it do you really want to go a la carte with four different softwares for these people in social media? The social media branch of our marketing department want to use this, and these people over here want to use that. When you could just have everybody on Adobe, I don't know. It's just creature of habit, switching costs. It's very simple, and I think again another good example of this is Microsoft. Just too simple, right? Microsoft Office 365. You try to get the finance industry to switch off of Excel, there will be a revolt. I mean, there are memes about that all over the place. But if you look at their numbers, I pulled them up on FinChat. This is just the Office. So we're not talking about Microsoft Azure. We're not talking about the cloud. This is the Office products and cloud services revenue. Since 2016, up 11% a year, CAGR. If we go to 2019, it's up 11.5%. So um, are there better alternatives depending on who you ask? Some people love Google Sheets. Some people love Google Slides over Microsoft PowerPoint. But again, Microsoft has this suite that has become so ingrained in the lives of professionals. And then the price per seat for a business is so small. It's like, is it worth all that hassle and stress to make that switch? Because there's this new hot shiny object that's going to make our marketing that much better, make our design that much better. Not to say it's not possible, but just to be able to disrupt that entire suite of products, I
Yeah,
think that's highly unlikely.
I 100% agree. And especially the bigger the company you get, I think the more simplification you want in that. To your point, you don't want all your employees working on 17 different platforms to accomplish the job. And if you look at, I'll revert to payments because that's my wheelhouse, right? So if I look at a company like Adyen, one of the things that sets them apart from other competitors is that it's kind of an all-in-one suite. And they work with that Visa and MasterCard to take care of that part, but the rest of the payment rail, Aja can do all in one place. And so when a large vendor, let's say a Netflix who uses them, shows up at the door and says, "Hey, I need you to be able to do all these things," because a company like Netflix or Amazon has to use 7 different players to accomplish one thing. Yeah, they may use one or two, but they're not going to use all 7 because it just makes their life a nightmare. And to your point about the necessariness of something like Adobe, we were talking to one of our members and he's kind of in that industry and he mentioned that it's kind of essential in their industry and you can't really, yeah, there may be other tools that may fit a specific need, but if you want to do everything in one spot, Adobe's kind of your thing. And it I think that speaks very well to whole like the whole enterprise value, the enterprise level of businesses and what you were talking about. Yeah, you may be, like we use Canva for a lot of the stuff that we do, but we're a small business. If we had 35 employees, we probably would use Adobe and we will hire people that know how to use Adobe. I'm self-taught, so I use Canva because it's easier for that. But that's not going to disrupt the enterprise level at this point or other people. And it may take one job, but like to your point, it's not going to take all of them because it doesn't have the capability to do it.
Yeah. The distribution of Adobe, their enterprise relationships, all of those things make it so, like you said, it's going to be really hard to disrupt that. And they do have that end-to-end solution. And they're bringing it out with the Gen Studio now, where they're even extending that further into this one easy dashboard for the marketing teams. So they are definitely moving towards what has worked for them and continuing to improve that. And that's one of the beauties of good software as a service models, and something that was a value prop not just for Adobe when they made the switch back in 2013, but also today when you pay for a subscription, you're getting a product that's constantly improving, constantly getting better. And I mean, unless the price goes up, you're still paying the same. Versus in that old model, you had to pony up to buy the new thing to get the updated thing. So, similar thing happens with their end-to-end solutions and the way that they serve enterprises. It only gets better and better from here.
Yeah, yeah, for sure. Yeah, a great point. So, question. We've been talking about management in some of our classes. So, from your perspective, is there anything you admire or dislike about Adobe's management?
Yeah, I like it. uh, it's clear that they're approaching this AI threat and seeing the positives of it, and trying to position the business to benefit from this rather than just sticking their heads in the sand, because they very well could just say, well, screw everybody else. We know what has worked for us. We're going to keep people on this. They've already implemented AI into their Acrobat, into Photoshop, into the parallel to Canva Express. They've incorporated that in, and they're open to changing their business model. They talked about how they're moving to a consumption based model. So if people want to run the AI, their customers can do that, and then the customers pay more. So that's very similar to how Microsoft and AWS and Google Cloud charge. They charge you based on how much you use. They're open to that, and they're seeing revenues from ways that they're improving their product. So, I like that. I mean, a lot of businesses kind of are forward looking like that, but it's nice to see some tangible results from them and them calling it out in their earnings call. I think it's cool.
Yeah, it to me it shows transparency. Like they're not trying to hide behind maybe just all positiveness. Like they're acknowledging that there is a threat out there, and this is how they're planning and working to overcome the challenge. And I like that. That makes me admire management more than sometimes people will hide behind the corporate speak and they won't really tackle the problem per se until management. So I think that's a really good thing, and it's admirable about the management. I also like the fact that the CEO has been there for a while now, and he certainly has a pulse on what's going on with the business. And he was able to, I guess, negotiate. It wasn't a turnaround, but he was certainly able to negotiate a difficult transition to go from the business model they had before to the one they have now. And he doesn't seem to be resting on his laurels. And I like that as well. I think that to me is those are traits that I want to find in somebody that I'm going to give my money to.
Yeah. Yeah, that's good.
Yeah. Is there anything about Adobe, like the business model or the idea behind it that you think you can air quote extrapolate to future potential investments? Like, is there a mental model that you can kind of take from this simple idea and how you can maybe, okay, I did this for Adobe, I can do this for whatever.
Yeah. And it's not like a big secret. These are businesses I've been looking at for a long time, and they've just been so expensive. So just being the industry standard software for something has the staying power, like we mentioned, the switching costs. Cadence is a great example of this. And actually, I was part of a team years ago where we tried to move away from Cadence and use their competitor Synopsys for the software. That was an absolute nightmare. And we ended up giving up after a few months and just being like, we're just going to go back to Cadence. So Cadence is like the software for cutting edge, the best chips kind of a thing. So the problem with Cadence is just they're always just 45p, 50p, 60p. Every engineer who does chip design knows about Cadence and knows just how powerful that is. And so it's a similar model to Adobe because it's an industry standard. People have built their careers on it and it's unlikely to change anytime soon. So that would be one, would be Cadence. Autodesk, I've heard of Autodesk and people have raved about that. I haven't looked too deeply into that because it's also always been out of my price range. There was another one that kind of popped in my head, but I'm blanking on it right now. In general, some of the software as a service stuff is starting to look pretty appealing from a valuation perspective. And it's interesting how they've kind of all come down around the same time. If the market continues to do what it's been doing lately, there could be more opportunity out there. We'll just have to keep our eyes open. The best stock picks require a light bulb moment. To see exactly what that looks like, check out one of my previous reports at stockwriteup.com.
Right? So what would be some signs that maybe on a positive side and maybe on a negative side of where you think your thesis might turn, like positively and negatively?
Yeah, that's a great point, great question. I think I think if revenues get to a point where it's not keeping up with the rest of the SaaS industry, if they're not keeping up with Microsoft Office, I think comparing to what's going on in the rest of the economy, if the economy goes sour, everybody kind of takes a hit from that. So we have to keep that in mind. But if there's a sustained period where revenues continue to not climb like they should, then that would suggest that they're losing market share. That would be a big issue. And I think on the positive side, if they can continue to just grow at double digits revenues like they have, their ARR continues to go up double digits, then we've already won. I mean, Google kind of feels like that right now. Even though the stock price isn't cooperating, they continue to have great earnings results over and over again. I enjoy watching that for obvious reasons.
Of course. If the CEO left, would that be a reason for you to like, do you feel like they're insular enough that it's not a key man risk?
Yeah, I don't think so. That's just my opinion, but I don't think so. I mean, I think it's bigger than any one person at that company.
Yeah, I would agree. I would definitely agree. From what limited, I don't know it as well as you do yet, but yeah, I would say I would probably agree with that. Steven's asking, every Goliath has its David. Is there anyone out there right now that you think if they play their cards right could bring Adobe down, or is Adobe just too big right now?
I mean, Canva is definitely making a splash. They were going to go IPO and then they kind of pulled back on that, but the valuation for Canva was pretty high compared for how small that business is. So it could be a Canva, it could be OpenAI, it could be OpenAI's ChatGPT, could be anything out there. And I think that's the big boogeyman risk is everybody is afraid not of what's out there now, but of what is going to be out there in the future. And that sounds so weird to say out loud. Like uh, we're afraid of disruption, but we don't know who it is yet. And so we're going to sell Adobe stock. That's literally what's going on right now.
Yeah.
I understand the AI gets better all the time. One of the things I've said before, which is not brand new to listeners, is trees don't grow to the sky. So everybody wants to say that AI is going to get to this certain point. I don't want to get into the jargon, but it could.
Mhm.
Also, it couldn't. So let's prepare for both, you know?
Yeah. Yeah. I know Canva is probably the air quote biggest single name that comes up a lot when people talk about potential competition for Adobe. But I really feel like they are they're kind of moving past each other. I feel like Adobe is catering to a much more specific customer than Canva is. And to your point earlier, Canva's got a lot of work to do to develop all the other products that Adobe does, that their enterprise customers and large businesses that use them, where they can kind of compete on that same level. Is Adobe maybe competing on the lower level like Canva is? Yeah, I don't, I'm not sure about that, but that's not really where Adobe is trying to be, and also where they really make their bread and butter. So it's really they're moving past each other a little bit. So there's that. And then to your point about the AI thing, it's kind of amorphous, right? It's just like they just throw out AI, and then maybe they may drill down and say, well, Meta can do some of these things with like image generation, or OpenAI can do some of those things with image generation. But what Adobe does is way beyond just developing an image. It's basically creating the whole ad. So if you see an ad on TV or in a newspaper or in a magazine, more than likely somebody has created that on Adobe, and all the different aspects of that ad are beyond just the image creation. There's the wording, there's the placement of everything, and all those things. And AI at this point, to my knowledge, it can't do a lot of those things. And so, yeah, it can create some images, and some of them are cool, but it's not. You can't adapt them like you can with Adobe's tools. And so the ability to manipulate them to get them to look the way you want is not there yet. And it may never be. To your point about the trees, it may never be. It could be 2 weeks from now, or it could be 10 years from now. But I think the thing is, when we think about some of these big companies and what could disrupt them, I think we have to look at specific use cases and not just throw out generalities of AI is going to take, well, which AI and who's going to really design that lever of AI to take down what Adobe's doing. And how many times in the last 2 years have we heard that Google search is dead? Like it, every week they're toast, they're toast, they're toast, they're toast, they're toast. And every week it comes out that they're still kicking booty. And so color me skeptical when
Yeah.
people proclaim that such and such is cooked in the language of today. I don't feel like Adobe is at that point. I just don't think that. I won't say that they don't have a Goliath on the horizon, or a David, I'm sorry, on the horizon. They probably do. It would be foolish to not at least acknowledge that. But I think the day of that David coming for Goliath is probably farther off than we may think.
Yeah. And there's like Figma too, was
Mm.
I know that one, at least in the FwinTwit community, got talked about a lot because Adobe was supposed to acquire Figma and then the deal didn't go through, regulators, blah, blah, blah. But they compete against Adobe XD, and Adobe actually, according to Leandro recently, axed that campaign. Or no, I think it was something I read on Quarter. They
Mm.
mentioned that Adobe XD not being a thing that they're investing in anymore. it was making the headlines, I guess, because of how big the M&A price tag was. It was like 20 billion or something. But it was really something that was so small of Adobe's total business that they've stopped even caring basically.
Right.
So it is, they have a big business. It's, 20 plus billion-dollar book of business, huge 22,000 enterprise customers. You can't replicate that overnight. I don't care if you're selling water in the desert. Like it's not easy to get 22,000 customers in a year, 2 years, 3 years, especially at the enterprise level.
Yeah, totally agree. 100% agree. So I guess to kind of wrap up, do you have any final thoughts about Adobe and maybe what people can learn from your investment in Adobe besides making a few bucks?
The biggest one for me was um, being okay with moving forward with something that fell out of my comfort zone and maybe did not feel like it wasn't what I expected. So the opportunity in Adobe being out there was not something that I imagined myself doing, but was able to push through anyways. And like I wrote in the write up, the market could continue to fall. We could have tariff uncertainty for now for the next 3+ years. Northrop could be a great defensive pick and could sustain while the rest of the market goes down. But in 10 years, will I regret buying a business that grows at double digits seemingly at ease? Probably not.
I would agree with that. And I know when you told me you were excited about the pick, I was excited because this, like we said at the beginning, this has been on my watch list for a long time. And so the fact that we now, 7, 8 years later, finally have an opportunity to buy it is kind of cool.
Well, one of the things I said to you I think it was at the beginning of the month, because
Mhm.
you had brought to me three ideas, and
Mhm.
then one of them was Adobe, and then I made a joke to you. I was like, I like Canva too much to ever buy Adobe.
Right.
And then like a week later, started thinking about that. Well, maybe there's something about Adobe's model I don't understand. And then yeah, come to find out that there's a lot more to Adobe than just them competing against Canva. And I
Yes.
think that speaks to, if you have, that's one of the things too. Like there's so many stocks that dip that I get this automatic disqualification. One thought that everybody else is having because they're all bearish on the company. Oh, I would never buy Meta in 22 because of Zuck or something. And then you just never do the work. Getting past that like auto reject feature to find really great businesses trading at a low price, I think is a valuable skill that I'm continuing to try to learn, because obviously I almost axed Adobe before
Even
we even had this
started.
combo. So yeah,
Yeah. Yeah. Well, I mean, it shows to me, it shows a flexibility to think past the auto reject and
mm,
try to dig a little deeper and following your curiosity. And I think
yeah,
those things can be very, very helpful and beneficial in your investing career and your journey.
for sure.
All right. Well, with that, everyone, we'll go ahead and wrap up our show for today. Thank you for listening. We hope you enjoyed our discussion. And if you're curious about what we're doing, come over to Value Spotlight and check it out. So with that, we'll go ahead and sign us off. You guys go out there and invest with a margin of safety, emphasis on the safety. Have a great week, and we'll talk to you all next week.